How's it going, guys? T-Wolf Trader here with another video. Today I'm going to be talking about trading with emotion, and specifically for day traders and swing traders. Now I know what you're thinking. T-Wolf, I've spent so long trying to get my emotions out of the equation, trying to cut my losers and let my runners run without getting all emotional and excited about it. And now you're telling me I have to trade with my emotion again? I'm like, no, you're misunderstanding me. I want you to trade with the market's emotions, not your own. Leave your own at the door, but you have to understand the market's emotions in order to understand what the price action is going to do next. In order to try to predict the future of price action based on current price action, you need to know something about the emotions in the market. So before I get really into it, let me define two things: technicals and fundamentals. I call technicals anything that has to do with chart reading, specifically price action, volume, and the 20 different indicators you have on your chart that don't allow you to see anything. Yeah, that's all technicals. Fundamentals are anything that has to do with the health of the economy, the health of the company, and I've kind of broken them down here, the things that I consider most pertinent in terms of how they affect price action in the short term and long term. It's a bit subjective, but I like to break things down, and even though they're strongly all correlated with each other, this is how I see them. The thing that most affects price action in the short term, I believe, is news and press releases. So staying up to date on when press releases are coming or when news reports are being put out is your number one indicator in terms of short-term price action. What the hot sectors are in terms of overall market sectors are is probably about a medium-term effect on price action. So if you're trading COVID stocks in August of 2020, you know that this is a hot sector. If you're trading Bitcoin in December of 08, you know that anything Bitcoin related is blowing up. If there's Tesla's going off, then all the electric vehicle companies in the sector are going off. So understanding what hot sectors are on the month, on the week, will allow you to get a better understanding of the price action. Company financials are more on the long-term side of things. Is it a healthy company that has consistently positive earnings report? Do they have good cash flow? Do they have good asset to debt ratio? That kind of stuff, that's going to affect price action on the longer term time frames. And then finally, politics. Is the national economy improving? Is it getting worse? Is there some kind of crisis going on? Is there a war going on? These kinds of things will give you a more long-term price action understanding. Now, you need to understand these two things separately because they can't exist in isolation. The technicals don't exist in isolation. The underlying market sentiment is directly correlated to the price action's adherence to the technical patterns you see. What does this mean? This means that if there's a consolidation zone and you're trying to determine if it's going to break to the upside or downside, the past price action can give you some indication, but to really get a high probability trade, you need to understand what's going on fundamentally with the company. So here's an example of the New Zealand to US dollar index. You can see that this equity recently made a new high. It's dipped back down into this consolidation zone between 80 and 82. It's rallying back and forth. What's going to happen next? Well, in order to know or to at least get an idea of whether it's going to break to the upside or the downside, you kind of need to know, is this existing in an increasing economy or a decreasing economic environment? And is the US dollar increasing in price? Is the New Zealand dollar decreasing in price? That'll give you a good idea of what this equity is likely to do. So one more time, the technical breakout depends on the fundamentals surrounding it. Let me give you a more concrete example that actually happened just this week. Here I have the stock of AMPE. Now, this was a COVID stock. In July, I started looking at this stock. I know that they have press releases coming out related to a COVID vaccine therapy. So in July of 2020, COVID vaccines are hot. And so it started breaking out to the upside. And, in the beginning of August, it started forming this bullish flag. Now, if you look at any textbook, this is a bullish flag pattern. It's very likely going to continue to the upside. And I know a press release is coming. That's why this bullish pattern started in the first place. However, around August 6th or around August 7th, Russia released some news that there was a COVID vaccine that they developed. Whether that's true or not, that's not for me to say. All I know is what this chart is doing. The market started dipping. All the COVID vaccine plays started falling. And that's what told me that this was going to break to the downside, that it wasn't going to be a simple, fake out to the downside and then go up. This was news that had to digest from, 3 to 7 days is traditionally what we look at for news to digest in the market. And so it started dipping. And it's only now that it's hitting the 20 SMA that it's starting to look like it's going to consolidate, that it may be turning around a little bit. But that news was what told me to get out of the stock at 101. So yeah, that's how you need to understand that technicals and fundamentals are strongly correlated. You can't look at either one in isolation. All right, guys. Hopefully this video taught you something, hopefully a new lens to look at the market. And I'll be seeing you in the next video. Let me know if there's any topics you'd like me to cover, and I'll make sure to get to that. All right, thanks, guys.